All right, let's jump right into this explainer. We're looking at a truly fascinating anomaly that's quietly but rapidly unfolding in the global silver market right now. The underlying mechanics of this major commodity are breaking away from decades of history, and it's shifting the balance of power and wealth in ways most people simply aren't paying attention to yet.
The source material actually kicks things off by asking us to do something a bit counterintuitive. Look past the daily financial headlines, ignore the stock tickers for a minute, and focus on the loading docks, specifically massive physical movements happening at warehouse loading docks over in New Jersey. We're talking about a historic shift in how silver is actually held, not just a change in market sentiment, but literally trucks moving real heavy metal out of the system. To put some numbers to the shock, just look at the data from the end of 2025. In merely the first 4 trading days of December, over 47.6 million ounces of physical silver were claimed for delivery. I mean, let that sink in for a second. That is not a typo. That single figure represents more than 60% of COMEX's entire registered silver inventory being wiped out almost instantly.
Section 1. The COMEX Vault Drain.
So looking at the full year of 2025, settled ounces more than doubled to a whopping 474 million compared to the previous year. This massive spike kicked off a relentless 15-month consecutive vault drain that the exchange had, quite frankly, never processed before. It really makes you wonder, right? If this many people are suddenly demanding physical metal instead of just trading paper contracts, what exactly do they know that the rest of the market doesn't?
Moving on to Section 2, Paper Promises versus Physical Metal.
A huge piece of this puzzle is that the silver market recently entered a state of backwardation. Now, the analysts in the source note that this is a massive, flashing red warning sign of immediate, unquenchable demand. Normally, future prices are higher to account for storage costs and time. But right now, buyers are willing to pay a premium just to get their hands on the metal immediately. That tells us there's a very real-world supply shortage happening right this second.
And here's the crucial point. Paper leverage sits at 5.7 times. Think of it like a high-stakes game of musical chairs where nearly 6 people are eyeing the exact same seat. The whole system is basically built on the assumption that most people will never actually ask for their physical silver. But when investors suddenly start demanding those tangible 1,000-ounce bars instead of just holding ledger entries, a system built on that kind of extreme leverage starts showing some pretty severe cracks in its foundation.
To really highlight this dramatic shift to physical reality, look at the Sprott Physical Silver Trust. Their sole business is holding real silver for investors. Well, they doubled their capital raise program in January 2026 to $2 billion. In one single institutional sweep, they snapped up roughly 18 million ounces. That's about 16% of COMEX's registered inventory, just gone.
Which brings us to Section 3, China's strategic silver play.
The data we're looking at implies an incredibly deliberate strategy by China. Check this out. Throughout the first 11 months of 2025, they absolutely flooded the market, exporting over 4,600 tons. And then they suddenly slammed the door shut. On January 1st, 2026, China officially reclassified silver from an ordinary commodity to a strategic material. That puts it in the exact same highly protected category as rare earths. Almost overnight, their exports dropped to a strictly controlled trickle. Observers make it very clear that this is not just some minor bureaucratic tweak. It's a geopolitical declaration. By enforcing strict output minimums and granting export licenses to only 44 approved firms, China has essentially given itself a massive dial to choke off global supply whenever geopolitical circumstances suit them. Naturally, this strategic maneuver immediately sparked an industrial panic in the West. We saw this clearly evidenced by Elon Musk's pretty stark reaction to the export restrictions. He recognized right away that silver isn't just shiny money anymore. It's an absolutely crucial, irreplaceable component for modern industry. And suddenly, the main tap had been heavily restricted.
Section 4. The Global Supply Crisis.
So, let's talk about industrial demand for a moment. It's being intensely driven by green energy, like solar panels, the massive boom in electric vehicles, and of course the insane AI infrastructure build-out with all its power-hungry data centers. Because of all this, industry now consumes roughly 59% of all silver. It's become so vital that the US actually recently added it to its critical minerals list. This metal is literally the bedrock of the next economy.
Against that soaring tech demand, the industry faced a pretty bleak reality.
We're talking about a fifth straight year of structural supply deficits. Between 2021 and 2025, the market accumulated a staggering 820 million ounce shortfall. For years, this massive deficit was quietly papered over just by drawing down above-ground inventories. But now, with China withdrawing its supply, that mask is definitely slipping.
The source really emphasizes a severe physical reality about how silver is actually produced. Mine supply is notoriously inelastic. It's basically stagnated right around 1.03 billion ounces for over a decade. You might be wondering why. Well, it's because the vast majority of silver is mined purely as a byproduct of digging for other stuff, like gold, copper, lead, or zinc. The supply literally cannot just ramp up overnight simply because AI or solar companies suddenly decide they need way more of it.
Section 5. Stagflation and macro pressures.
Adding fuel to the fire, the World Bank projects a 42% surge in precious metals for 2026. And this is being driven by what you could call a perfect storm. We've got Middle East energy disruptions, sticky global inflation, and the very real looming threat of stagflation, where economic growth just stalls out, but prices somehow keep rising. This creates a really nasty trap that leaves central banks with absolutely no clean exit.
So rather than just crossing their fingers and hoping for policy miracles to fix this stagflation trap, central banks and sovereign nations around the world are reportedly taking deliberate, structural steps to reposition their reserves. They are actively moving outside of Western dollar-denominated systems. We're seeing Turkey, Russia, India, and notably China. China's gold ETFs saw an incredible 243% surge in 2025 alone. They're all making these long-term structural plays to secure tangible, sanction-resistant assets.
And finally, Section 6, the next decade of silver.
Historically, back when gold and silver functioned primarily as money, the ratio between them was roughly 15 to 1. Today, however, it sits highly elevated at roughly 60 to 70 to 1. The analysts point out that even a partial return to those historical norms implies some massive potential price appreciation for silver. We're talking about growth that could easily outpace gold's gains.
And you better believe Wall Street's catching on to this. With gold already pushing past $4,000 and silver surging above $70 by early 2026, major institutions are aggressively upgrading their targets based on these acute physical shortages. We are seeing Goldman Sachs projecting gold to hit $4,900 by the end of 2026, and Citi is issuing targets of $110 per ounce for silver in that exact same time frame.
Yet, despite all these surging targets and the clear panic over supply, the actual extraction of physical metal from the vaults remains incredibly stealthy. Analysts describe it as a very slow, deliberate, and organized extraction. It seems like institutional accumulators are intentionally keeping prices contained and avoiding those flashy headlines, while they systematically drain the vaults of real metal right before the rest of the world wakes up to the reality of this structural shortage.
Which brings us to our final and honestly, perhaps most important question. Given the undeniable clues left behind in COMEX vault records, the strict new export permits, and skyrocketing industrial demand, are we watching in real time the early stages of a massive repricing? The evidence heavily suggests that this paper-to-physical shift might just be the ultimate financial turning point of our era. And it's one that could absolutely define the next decade of wealth. Let that thought stay with you.